Good evening, Facebook. We have Melody here, one of my good friends. Been a blessing to me and Mel. My friend Ron Guest going to join us tonight. All right. So, last week we was off.
Yep.
Celebrated 16 years of marriage.
Congratulations.
How did Ron, of course, how did Mel put up with me for 16 years?
That's what I'm wondering. especially you being a Cowboys fan.
Being a Cowboys fan. So, Mel, you and Ron.
We have a little history about that Cowboys, right?
Yes.
What about?
My dad is a Cowboy fan. Ronnie's dad is a Cowboy fan. His granddad is a Cowboy fan.
Oh, I didn't know they went back generations.
Yeah. It went back generations.
Maybe I won't give you as much stuff about that anymore.
We got to convert you.
Yeah.
Right?
We got to convert Ron.
What's your team?
Denver.
Broncos, mainly our part.
Broncos.
And the Colts, because it basically started with Peyton Manning. And then,
I like Peyton.
Yes,
I like Peyton.
Good people.
Yeah, Peyton. Tonight, at this time, will you please hit the share button?
I gotta make.
It's going to be real good. It's going to be a blessing to you tonight. This man has been a blessing to me and Melody. We consider him one of our close friends, and he's got some good information that he's going to share tonight. Ryan, you want to chip in?
Yeah, so I've known Ronnie and Melody for quite some time now, and been some of my favorite people that I've ever had the opportunity of hanging out with. I met Ronnie originally
10, 12 years ago.
Yeah, it's been a while, and Extreme Clean. I'm gonna give a little shout out to Ronnie's business of Extreme Clean.
Yes.
And how great of a job they do, not only with cleaning cars, cleaning anything. They clean everything.
Yep.
Yeah.
Especially in this time of COVID, they're really great at a lot of things. And more than anything, is Ronnie is an amazing individual and a gentleman that loves God.
Yeah.
And that's one thing I've always loved about him is the fact that his love for God and his love for Melody. And she's a hard worker, of course, at FedEx. That keeps pretty much a good portion of our city employed. I work for Evolve Bank and Trust, and I've been doing mortgages roughly for about 15 to 16 years.
Yes.
And I've had the wonderful opportunity of helping Ronnie and Melody with a couple other financial transactions with that. And that's how we know each other amongst the cleaning aspect. So this home that we are having the lovely opportunity to come to you from tonight, I had the opportunity to help them.
Help us.
Yeah.
And now we're doing it again. And with interest rates being so low, we're helping them save money and reduce that interest rate and the term, because if you have that opportunity, keep that payment roughly about the same and save, I think, over $100,000 in interest long term. So I'm excited for them, and really happy to be here tonight and share some of my insight and some of the years of wisdom that, again, I don't know everything. A lot of people will tell you that I don't know everything. I'm really good at putting my foot in my mouth at times, but I will help you out the best I can and at least give you solid information so that way you can make wise decisions.
Yeah.
And as Ryan is talking tonight, please post your questions as he is going through talking about, buying homes and refi and qualifying and having good credit scores and how do you build your credit and those kinds of things. Please post your questions, and we will, at the end, we will have you answer those questions.
Yeah. Hey, Mike Britt, Bobby Craig, Cheryl Hall, how are you doing, cousin? Shanice Franklin, Leanne Brown, how are you going? Also to Ron, I see some of Ron's friends out there.
Can you read that from that side? Mike, we got Mike Craven,
Hey,
we got
Mike, how you doing?
Keisha, and we got Patty.
Guys.
So
Cool.
Welcome.
So, like I said, last week we didn't have it, but we definitely didn't want to. We wanted to do something special tonight. We live in such a difficult time, challenging times. COVID has changed everything.
it has.
But I really believe that there are some individuals out there. You might have a home. You might thinking about selling it. You might think about buying a new home. You might even think about what you need to do to get qualified for a home.
Yeah.
So tonight we're just going to chime in and, like I said, at this time, hit the share button. We want as many people as possible to get on there. Hey, Auntie. Hey, Mike, my brother. Ryan, my brother Mike, he might be buying the house real soon. He's out here. He's on here also tonight.
Yeah.
All right.
And I just want to say
Thank you for your time.
taking out time
Yeah.
to do this. We really appreciate it. And, I have to say this, but, with all the things that's going on in the world, it's just some good people out there. And if we can just, unite and love each other, I have to say that because Ryan has been a blessing to us and he's willing to take time to be a blessing to everybody on this Facebook. And so
Yeah.
I just want to say thank you again.
Oh, absolutely.
Hey, Dr. Meekins, Richard and Sam Meekins. Hey,
Hello,
Rebecca, how are you
guys.
doing out there? I saw Rebecca, tell your mom, Mrs. Phillips, I said hello. Hope you guys enjoying your trip down in Florida. Charles Newman, our son-in-law. Okay, Mel.
All right, so let's get to it.
All right.
Let's get to it.
So the biggest question, and I think that comes into play, is the how do I buy a home? Like, what is the first step? And it's kind of like when you build a home, you have to set the foundation. Without a solid foundation, the walls are going to tumble in.
Yeah, exactly.
You got to start somewhere.
Right.
And for me, that foundation is first and foremost is getting pre-qualified. There's a lot of misinformation out there. I know the internet is really a great place to go for a lot of information, but there's a ton of misinformation out there.
Right.
And really, what I try to do with most individuals is I try to get them to apply. And now a lot of people are afraid to apply. They're afraid, oh, well, what if you pull my credit score and it drops? Well, when I initially pull it, it does not drop your credit score.
Okay,
And that credit that I pull at that point in time
Okay.
is good for 90 days.
90 days.
90 days. So if your credit's good to go at that point in time, you have 90 days to make a decision based upon the credit that I pull.
Okay.
And sometimes we can actually go out as far as 120 days, but use 90 as your marker there. And what we do from there, we take a overlook of your income,
Okay.
your assets, credit. What is your game plan? I mean, what's good for the Johnsons may not be necessarily good for me, and vice versa. Just depending on where you are in your life cycle, that's what I look at. I don't paint people into a box and say, okay, there's your deal. Have a great day. No, we need to talk the deal over. What are your financial goals over the next couple of years? Because let's say hypothetically that you're only going to be in the house for a couple of years. Well, that may help determine where I'm going to put you over in this instrument
Right.
compared to this instrument.
Right.
And, we want to build that foundation. And that's where the application is. Because you can tell me everything that you want to over the telephone,
Okay,
but until I actually get a hard look at it,
okay.
your income, your credit.
Yeah.
Credit is so key. And one of the things I want to tell people out there, there's so many of these different credit services out there. You see the Credit Karma. A lot of the credit cards out there right now are providing credit score services that are all free. And I would say, on average, I hear it a couple times a week. Well, Ryan, the credit score you pulled for me
Exactly.
is less than what I have
Okay.
on these services.
And I'm glad you're addressing that
Yeah.
because a lot of people think that when they look at Credit Karma, that's the actual score
Right.
that's being pulled, but it's different.
Yeah.
And so just wanting people to understand the difference.
And also, out there, a lot of people don't understand, Ron, you can hit on this also, once you hit on that point with Melody, is that you might have good credit, but your income to debt ratio can also cause problems also, right?
Right. Yeah. And so if you go ever look on Credit Karma, you go look at Experience, all these different services. If you go to the small print, that nobody ever reads the small print when they
Yeah.
write a contract and everything. They just go, oh, and it's where I sign. Go to the small print. It'll tell you right there in the small print. These are not the scores to be used in a business making
Yeah.
decision. Now, I will say this: there are some great things about those services. Those services will paint a picture for you of what direction your credit is going. If your scores are dropping on Credit Karma and all these other services, guarantee you they're dropping on me.
Exactly.
They're going up in those things. They're going up with me.
Right.
So those are the things that we really want to look at. And one of the biggest things I try to tell people, just a few tips real quick for you. If you have credit cards, go set those credit cards up on automatic payments.
Yes. Yes.
Most credit
That's
cards,
good.
if you don't have super high balances, $30 to $50 a month, set it up, because in that way you can forget it. You don't have to, oh my gosh, we're all busy.
Yeah.
Society is nonstop in every aspect. And I can't tell you how many people I constantly come in contact with, make great money, have no problems paying their bills, but they got limits.
Yeah.
And the reason why is like, oh, I forgot about it.
Right.
Wow.
So if you set, you can forget. Do you know what I'm saying? And it's that way, at least that way you can go on there and pay more towards that bill when you want to, but at least you know the bare minimum is met and you
Yeah.
don't go down 30 days late.
I got
Now,
And the minimums though, is that,
now, I'm not telling you just to pay the minimum. Pay the minimum just to keep your credit from going late.
Try to pay as much.
Try to. One of the biggest things that people are like, oh, I pay on bills late, on time. Why is my credit score this? That has to deal with debt utilization on your credit cards.
Okay. So basically, what Ron said is with debt utilization. Let's say, for instance, that if you have a $500 credit card, right? And $500 credit limit, and the balance is $480.
Right.
That's a high debt.
That's a high
You have to
debt,
try
yeah.
to keep that debt within under
30.
30%, right?
Yeah.
Okay, I got you.
See, he's been paying
See,
attention
yeah.
to what I've told him over the years. So on that credit card, if you think about it, $500, so you want to continually keep that debt utilization under $150. But you're like, well, Ryan, I pay that off every month. The issue is that you really don't understand is that these credit cards, they report to the different bureaus, TransUnion, Experian, and Equifax, when they want to. There's not a specific time. They normally can range in a certain period of time of the month. And, one thing I do like about Credit Karma is that you can kind of see when they're normally, you can kind of pick up when they're reporting month after month. So you can kind of watch that. But just because you pay it off to a zero balance every month doesn't necessarily mean, they could end up
because
reporting
they can pull it.
Yeah.
They can pull it when it's at.
So-
490,
Exactly.
Oh, I got you.
Yeah.
Wow.
So,
Got it.
So at this time, put in the comment section if you have any questions for Ryan. At this time, also, give me a thumbs up to let me know you can hear us out there clearly, as well as hit the share button.
Yeah,
Now, what you got to
please.
say to the people?
No, I'm trying to soak it all in. I
Oh,
mean,
you
I know
think about-
we've been learning from Ryan over the years, but I'm still trying to learn more.
So listen, it's something you said that was key, and I don't know if you heard this, that we're in the process of looking, even with the home we bought 3 years ago, there are options out there. Right now, the interest rates are so low, right?
yeah, I mean, I've been doing this for, like I said, 15, 16 years. They're the lowest they've ever been.
Out
I
of
mean,
15
absolutely low.
years, 16 years,
Yeah.
the interest rate is low.
Yeah.
Yeah.
He just said that. You're going to be able to save us how much money?
It's going to be over $100,000
Over
worth of interest
$100,000.
over the life of the loan.
We can give more to the house of God with that, Mel.
Exactly.
Okay. What's,
Easy to hit that tithe note.
Exactly.
got to pay the tithes, offerings, though. Okay. All right, let's go to the next point.
So once again, I'm Ryan Guest with Evolve Bank and Trust. And if you actually want to reach out to me,
Yes.
I think Melody and Ronnie will put my contact information on their page.
Yeah.
But
Yeah,
you can
post it
reach
out
out. I'll give you my cell phone number right now. It's 901-461-7215. Or you can contact me at rguest, that's like guess who, guess what, at getevolved.com. And be more than happy to spend some more in-depth time with you. And if
Yeah.
you have issues, we'll talk them through. I'll help you build a game plan. And if I can't help you build that game plan, I will point you in the direction of somebody that can. Because sometimes people may need a little extra help with their credit. I can give you surface. I can't spend the time to help you write letters and stuff like that, but I can point you in the direction of people that can.
And so, one thing we talked about, this is actually week number 10, Mel. With this
Oh,
whole thing,
wow.
this is week number
Wow.
10. And we talked about, the beginning, our first lesson was on managing stress and emotions while the quarantine is going on.
Yeah.
So we know a lot of the stress and negative emotions come from financial stress.
Yeah.
So basically what we're doing is that it can be stressful trying to pay rent every month. And a lot of people that's paying mortgages.
Yep.
A lot of people don't know that I think is in situations where they're renting when they can actually be buying.
Yeah, that's a good point because, if you're paying just as much as you would if you bought a home, then to me, it's better to actually buy than to actually, rent. Now, it's totally up to the person, of
Well,
course.
absolutely, yeah, because some people may not want the responsibility of owning, and I understand that. It's home ownership is not. It is a big step. It is a mentally a big step for people to go out there and purchase a home.
Okay.
Because there are responsibilities. There's upkeep.
Okay.
Right.
When what do you do when things go wrong? Who do you call when things go wrong? And that's why it's really key on having the right people around you that
Right.
will help you
Exactly.
build that foundation. The realtor, the loan officer, the other individuals, a home inspector that will go and check out the home to make sure that the home has good bones, so that you're not buying something that literally, 1 year later, you're dropping $30,000-$40,000 on trying to fix it up. Yeah.
Well, we have a couple questions here,
Okay.
right? Marion Munson says, can I afford a 3 to 4 bedroom house with a $2,600 a month income?
Easy. $2,600?
Yeah, $2,600.
Have you already heard the saying, Miriam?
Yeah, Marion.
It's location, location, location. Depends on where you're trying to buy the home. But, and what other debts you may currently have. That would be a question and that's the reason why it goes back to the whole application thing. Because at that point in time, I can say, okay, well, you can afford XYZ per month. That's when you get in touch with the realtor. A realtor tries to put you in
So basically a pre-approval level.
Pre-approval, right.
Exactly.
You're going through the qualification purpose because, a 3 to 4 bedroom house in one part of town may be XYZ cost, while in another part of town, it may be double, triple that.
Okay.
And just mentioning that, it's so important to get pre-approved, before you start looking for
Right.
homes. You want to get pre-approved first because you want to know what you qualify
Well,
for.
what you qualify for, what you're expecting. I'll put it this way. Realtors right now are not taking people to see homes the majority of the time
Right.
without being pre-qualified.
Right. Right.
Realtors are busy. They don't make money unless they sell a home. And they don't want to be Uber drivers. And so please don't take offense to that. They work. It's just like it doesn't mean coming and hanging out with you at your job all day. And like, you're not going to get done what you need to get done. So you have to respect those people's time and the fact they can't help you.
Going all over.
Right.
Yeah,
right.
exactly.
We have another question from Christiana Abba. She says, how long after establishing credit you should try to build your credit before looking at buying a home? What is the average time span?
Okay, so let's say hypothetically you have zero credit, like you have never had anything ever before. It will take you 6 months to have something show up as far as the score.
Okay.
So like let's say hypothetically you just graduate high school, 18 years old, clean slate. It's going to take you at least 6 months before the three bureaus start reporting something.
Okay.
That's a great question actually. And what you really want to focus in on when you're building your credit, you got two different types of credit. You have installment-based credit and revolving. Installment is where, let's say hypothetically you go buy a car, 5 years, 60 months. You pay those 60 months worth of payments.
Right.
It's yours, right? It's not a revolving door. Credit card's a revolving door.
Okay.
Think about it this way. Think about that when you get one of those revolving doors, it's always there. So let's say hypothetically you put $1,000 worth of charges, you pay it down to zero. Put more money on it, it's always there. You can always come back to it. And that's the reason why when you're thinking about things, when you're getting your credit pulled, credit cards are the hardest of all credit inquiries on there. Mortgage pulls are the least invasive because they're secured by a mortgage. There's something that securitizes that on the back end. So I get some people that say, well, I don't want you to pull my credit. Well, I kind of have to kind of paint a picture of where you're at. And that initial pull isn't going to hurt your score when I pull it right then and there.
Okay.
And even when it does, it's going to be on a minute level that it's not truly going to affect you comparatively speaking to what you're trying to find out. So.
Wow. Cool. Now, what question you have for?
So you had talked about making sure regarding good credit. So what do you recommend to people? Because I know sometimes people will have their credit pulled and they haven't had their credit pulled before. And then when they get ready to buy a home and then it's pulled and then they find out they got all this stuff that they didn't know about.
Yeah.
So what do you recommend people do to make sure that they don't have things on their credit that they're not aware of?
I would subscribe to the services. Subscribe to Credit Karma. Like I said, it's not going to give you a 100% accurate credit score, but it's going to paint a picture of what collections or other debts that you may not. A lot of times what happens, especially with medical collections.
Exactly.
And here's the thing that I really hate, and I wish there would be some reform type based bills on this. Let's say hypothetically, I paid all my bills on time.
Okay.
I have great utilization. I keep all my credit cards under 30%. That would probably put me at about a 770, 780 credit score.
Okay.
Let's say I go to an outpatient or a minor med place, get something done. They send me a bill. I don't pay it. It goes to collections. That credit score is going to probably drop anywhere from 60 to 80 points.
Whoa.
You're talking, it could be a $50 bill,
60 to
80
80
points. It could be literally
Wow.
one deal, and it could drop your score that much. It could be $50. So I wish they would reform medical debt on collections, because I don't think it paints a true picture of the way a lot of people. So those are things that you really want to look at. You want to make sure there's no erroneous type things that may be up on your credit report. So I think it's good to watch those services, use them to your advantage. Like I said, it's not going to paint the truest picture of where your credit score is, but at least you know if anything fraudulent comes up or you're not aware of something.
Okay.
And stuff. And also, when you're dealing with people, you want to say hypothetically, you have something that pops up on your credit,
Okay.
collection or something. When you call in and talk to these people, always try to talk to a manager.
Okay.
The people that are on the lowest level, and it's nothing. I don't want to be, have the whole thing. Don't be the Karen, but be the Karen when it comes to your credit.
Credit.
So you have to be a little aggressive when it comes.
You got to be
And
aggressive.
sometimes
Yeah.
out there, hey, Michael Thaddeus, Valerie Jones, Richard Meekin said a good resource is annualcreditreport.com. That's a free
free one.
service.
Yeah, there's plenty of them out there, so use them to your advantage.
Okay. And another thing I would say that, let's say it's that individual out there that has a lot of old medical bills or old debt, maybe 5-10 years. Sometimes if you would just call that, the individual that you owe, they might work something out, with you.
Depending on the age of it, yeah. And that's the thing. When you're talk to an educated loan officer. It doesn't have to be me. Make sure who you're dealing with knows their stuff. You may hypothetically have a 4-year-old, 5-year-old medical collection, okay? And as long as that medical collection hasn't reported in the past 4 or 5 years, I'm going to tell you to leave it alone, because we're not going to count it against your debt to income.
Okay.
And sometimes when you pay off old collections, it takes that and puts it in as newer
New debt.
credit.
Oh.
And even though you paid it to a zero balance, it could sometimes have an adverse effect on your credit score.
Wow.
So,
Wow.
Okay. Edward Thompson says, why is it a bad idea for you to pay off your car note a year earlier?
well, I
I
don't
don't think that's a bad idea.
no, if you have the money, no.
If you have the money to
I
pay
prefer
debt
to
off,
do that.
Yeah,
pay that
now
debt
I will
off.
say this though, unless you have other credit card debt at a higher interest rate, I would focus in your payments on that. Always focus in on the highest interest rates.
Yeah.
Because
Yeah.
I don't know if you guys ever read, like, how they had to, I think the Consumer Financial Protection Bureau put it into place. When you actually look at your credit card statement, and you'll see, like, if you just made the minimum payments, what you would pay.
Take 5-10 years to pay off.
And the amount.
It'd make you sick of your stomach. So
Yeah.
I would, I think if you can, pay it off soon. But always focus in on that higher interest rate debt and keeping those credit cards, if you can, below that 30% level.
Okay. Kristen Garrison have 2 questions. She says, is there credit reporting better than the others? Example, Credit Karma, Experian, etc. And she also said, is it good to pay off medical debt once it drops on your credit report? I heard that it's never removed after settlement or payoff.
No. And all right, those are some great questions. As far as like, is one of those services better than the other? No, I find that they're all off compared to what we pull. And unfortunately, what we pull is a hard pull, but there's nothing you can do. I just say they're good tracking places, and I'll keep on coming back. They're good at tracking. I don't know of one that is closer to our actual scores than other ones. So I don't truly have an answer, and I'm sorry for that, but they're just good monitors of really what you have going on. And the other question was about medical debt. Medical debt is one of those things that is, you are correct. If you pay it off, it's still going to be on the report unless you can work with the individual that put on there and get them to agree that they're going to remove it. And before you pay it, make sure you're 100% that they agree to that. And you know, by law, you can actually record that conversation that you're having with them. So if they agree upon that verbally, you can actually use that.
Because that actually happened to me where I had a medical thing on there and I didn't even know. And it was a very small, it was a very small amount. And
$40.
I didn't know until Ryan told me, and he told me exactly what I needed to do when I called them and told them to take it off, and they agreed to take it off.
Yeah.
Yeah.
And a lot of times, I'm working with another gentleman, same thing. He got a erroneous medical bill for $50. It's
$50.
always these weird amounts that are low, $50. And he said, okay, when was that? That this happened in XYZ. He's like, I wasn't even there. I was out of the country when this occurred, and I could show you proof. So now he's going to get that removed. His credit scores were in the lower 700s. It didn't report to one of the bureaus. That one bureau that it didn't report to, its credit score was 790.
Wow.
So this tells you how much that truly affects.
Yeah.
And those medical collections are, I would talk to the loan officer, and sometimes it may be advantageous to pay them. I'm going to tell you right now, the majority of medical collections, it's not.
Okay. Richard Meekin says, when is it a bad time to refinance?
When is it a bad time to refinance?
Yeah.
Not right now. Right now is a good time. I don't know that the bad time, what you really want to do and you really want to look at when you're refinancing is, okay, how much are you resetting your amortization schedule? Are you keeping the amortization schedule? Amortization schedule, for those that are out there, that is the amount of time that in which it takes for you to pay off the home. So if you have a 30-year mortgage, it's going to take you 360 months to pay that home off. And the amortization schedule shows the breakdown of principal, interest, and what that looks like over the life of the loan. But going back to this question, it really depends on how much are you saving. You may not be saving any money, but you may be shortening your term. So it's really dealing with individuals that truly understand and can help you understand and finding out what your goals are. Because, you know, some people may want, I want more cash flow.
Okay.
Some people may I want to pay my house off.
Okay.
So what that loan compared to this loan may look completely different. So it's trying to find out what the goals are of the individual trying to do it and see if it makes sense. And also, one of the biggest things I always ask people when they're refinancing, how long do you plan on being in the house? Because I want to make sure that by the time you get done paying closing costs and some other things, and we go over everything, that you are actually making headway instead of falling further behind.
Yeah, and that's what I really like about Ryan and him helping us, because one of the things that, you know, he's always told us, I'm gonna do for you what I would do if it was me purchasing.
I give you my opinion, and anybody who knows me knows I'm
So
too much.
So listen, this is great information. Take it, like I said, even after this, you can inbox us. We will give you Ryan's direct number where you can give him a call.
And we'll post it
And
as
we'll
well.
post it as well. Till Walker says, what is a good credit score to have before starting to look for a home?
That's a great question, and that actually is going to lead into some other stuff I'm talking about. Right now, so things have changed quite a bit in these times. COVID has rewritten a lot of what we've been doing. I would have told you prior to COVID, 600 to 620, I would have gotten done all day long.
Yeah.
Right now, COVID caused what they call illiquidity aspect, and what that has to deal with is people were allowed to file forbearances. And if anybody's out there thinking about forbearances, call me before you do it, or the service provider of your mortgage, and truly understand what that forbearance means. And what forbearance basically is that you're forbearing paying your payments right now, but you're going to have to make them up. Some of these companies out there and some of these institutions, banks, say, okay, we're going to forgive or forego the payments for the next 4 months, but at the 5th month, you're going to have to pay us what you skipped. So you need to make sure you
So they have to pay it at one time.
Wow.
Ooh.
So it's
So
like,
you really need to understand what you're getting into
Yeah.
before you. I've already had some clients that started off and then they talk to me and they're like, "What the heck am I doing?" And so they got out of it. So, but as far as back to your question, I'm sorry, I'm going on a tangent there. What's a good credit score right now? I would say that the meter has really ran to about 640 to 660 right now. There are institutions out there and brokers that can do it below. I will tell you right now, though, you're going to pay heavily with regards to that interest rate to get financed from that 640 to 580 range. There are still people that are out there to do it. It's going to cost you a lot right now. Until this stuff starts really clearing up and we get back to some sense of normalcy or whatever that means.
Yeah.
yeah.
It's just...
So would you recommend that they really work on getting it up?
I would,
before?
yeah, if you're in the low 600s, upper fives, there may be things that we can tweak, sometimes credit card utilization. I've dealt with a lot of people and helped them like, okay, get that utilization and watch that score take off. That's where you have to talk to educated people.
Yeah.
Don't just try to talk to somebody that wants to make a quick dollar off you right then and there.
Exactly.
Find out your financial goals, and so that way you can lay the foundation and game plan to move forward.
So one individual said right now they have a 3.9% interest rate on a house.
Yep.
Probably over 450. Is that a good-
450,000?
Yeah, over that.
It's time to refinance.
It's time to refinance.
Yeah. All right, so let me tell you something real quick. I mean, we got time, right? We got 28 minutes. Okay. There's a lot of people that will say, "Oh, well, don't refinance unless you can save 1%." I'm going to blow that whole thought process out of the water for you real quick. Let's start with somebody that may own a $70,000 home, $80,000 home, and let's say their interest rate is at 4.25%.
Yeah.
Let's say I can get them down to 3%. Well, that may only be savings of $50 a month, $60 a month.
Wow.
So you have to then at that point in time you have to really think, okay, if I'm saving $50 or $60 a month, how long is it going to take me to recuperate that money?
Yeah.
And so you have to be, and that's where I'll spend the time with you. If I don't think a refinance makes sense, I will turn you down.
Wow.
I will tell you I won't do the deal because it doesn't make sense. I wouldn't do it. I'm not going to ask you to do something I wouldn't do. Yeah.
And see, that's why, me and Melody, we are really big on integrity. We're really big on integrity. So that's why we like Ron so much.
Right.
We, like I said, on our other house,
and he is a person.
he's a person of integrity and
That's
character.
why
So we're out there. We got this whole setup because we want to help people.
Right.
We want to see. We don't want you get in a situation where it's going to take you 5, 10, 15 years, sometimes a lifetime to get out of. So that's why we got him on here tonight to just answer some of those questions and to try to put you in a position financially where we don't continue going over the same cycle. Because I've heard stories of where people even had like on car notes and mortgages. Can you tell me a little about the balloon payments?
Yeah. So there are deals where, balloon payment is basically, let's say hypothetically, you're coming to the end of a term and then you will owe the rest.
Okay.
Basically, at the end of that balloon period, if you're not in a position, either credit score worthiness, they can call that due. That's what it basically is. It's called due at that point in time. Now, most institutions will work with you, but let's say hypothetically you've had either a terrible pay history with that company, or your credit scores have dropped, or something has happened. A lot of times, sometimes they won't work with you, and they'll collect or whatever. And that brings me to the point you mentioned cars.
Yeah.
Even though that's not my forte, that's not what I do for a living. Sometimes people give up cars for repossession. Think about that very much because unlike a house where you got PMI and some other things, companies don't come back. Let's say hypothetically you foreclose upon a home and let's say you owed $300,000 and they only sold the home for $275,000 or $260,000. Somebody's not beating on your door for what they lost. On a car, let's say that you turned in a car and got repossessed and you still owed $6,000 on that car. You know what they're going to do with that car? They're going to turn right back around and sell it.
They're going to sell it.
And let's say hypothetically they only sold it for $3,000, but you owed $6,000. Guess who owes that other 3,000?
You do.
You do.
Wow.
And they will put that on your credit, and it will report late until you get it handled. And we actually have to count that as a debt a good portion of the time, unless there's other circumstances that are dealing with that. But going back, let me circle back to the individual about the interest rate. So interest rates and refinancing, it really depends on how much you're going to save, what are you doing with your term, and what are your long-term goals with your home. And that's one thing we'll spend the time with you. I'll help you understand your amortization schedule, understand like how much interest is costing you, so you can make that wise decision. And like I said, if it doesn't make sense, and I don't think it makes sense, I'll tell you to hold off or decide to do it. Yeah.
So what about the individual, might have bought a home, when they was in their 25, 30-year-old age, and they said, you know what, there was a starter home, but now I want to upgrade.
Right.
What's your recommendation for that individual?
For that individual that's looking to move on to the next step, their second home, third home, is to really look at the market, understand where they're at currently, how much are you going to net off your current home, what do you plan on doing with those proceeds on those, because right now what's going on right now is the housing market is probably one of the hottest period of times I've ever seen. A lot of these people that are selling their homes aren't taking contingencies. So a contingency basically is, okay, I'm going to buy your home once I sell my home.
Yeah.
And so a lot of institutions aren't doing that. So you really have to put together a good game plan and have a good team behind you to make sure that you're ready to go. Make sure you understand that when you're moving up into that new home, that you can afford the payment and that you're not going to make yourself house poor.
Wow.
I see a lot of people that put themselves into a box and one that they
Really don't want.
Yeah.
Yes.
And that's so important.
That's important there, man.
Staying in the right zone, because you don't want to go above your head, and that's important as well, because you still got to live after you buy a house,
Yeah.
right?
Yeah.
That's maintenance. It's kind of like buying a car. You go buy a $40,000 car, just because you can afford it on paper, doesn't necessarily mean that you should go do it.
Yeah.
And one of the biggest questions I get asked all the time is, how much can I afford? I don't look at it as how much you can afford. What are you going to be comfortable with when you go to bed at night?
Exactly.
I call it a sleep factor.
Okay.
You know what I'm saying? So let's say hypothetically, like when you're going to bed at night and you got a million things going on in your head, the last thing you want to be thinking about is like,
How am I
going to pay that?
Yeah.
Because that will keep you up. Because and that's the thing. What is going to allow you to be able to sleep soundly at night? Because I can afford this payment.
Yeah.
Because there's maintenance. Homes, they break down like cars. You gotta not necessarily change the oil, but there's things that always need to be done with the home.
Yeah. So when you were speaking of the contingency plan, other day here, I had a customer that experienced that. Basically, we polished her hardwood floors, and she was like, "Well, we had a contract, but the contract fell through because she was trying to purchase another home."
Yeah.
And the contingency plan was upon her selling her house.
Right.
However, another bidder came in there and bid more money than she had offered, even though she had a contract. So the homeowners went with the bigger bid because they didn't honor the contingency.
So
plan.
even if she has a contract,
Yeah, right now with the
They can. They have a lot of times written, if you have a contingency, more than likely they have normally a first right of refusal, 48 hours to drop that contingency.
Yep.
Oh wow.
So it's just, put yourself in a leveraged position that you can kind of to move forward. And there's so many different tricks. There are so many different things that you can do. A lot of people don't know. You can, depending on your 401k, you can borrow money against your 401k depending on who you're paying this through for the purchase of a home. And most of the time there's no penalties with that. You just pay yourself back. A lot of people also don't know, even if you have an IRA, that you can borrow money up to 60 days against that. So let's say hypothetically, I'm buying another home and I can't get the equity out of my house right now, but that's what you're needing for the other home. I could withdraw money from that IRA, sell my home, turn right back around and pay my IRA back off. So it's talking to people that are educated and understand the mortgage process to help people make wise decisions and move forward with their game plan.
Okay.
Can we talk
this
about-
person? Let me ask. this individual said what is the current interest rate for a credit score over 800?
On a 30-year term right now, depending on the loan to value, probably looking at an interest rate of 2.875 to 3.25, depending. There's some things that go into that, but based upon that credit score, you should be anywhere in that range. And that's one reason why I say people like, you get people that call me on the phone like, hey, what's your interest rate? Well, I don't know what you got going on, you know. So it's like, you know, how much you owe on the house? What are you trying to do? How much are you putting down? So all these things are specific. And, you know, if I want to do somebody right, I'm going to take the time with them, help them understand that so that I can provide them accurate information. Otherwise, I'm just saying something to say something.
Okay,
Yeah.
cool.
Yeah.
And one thing I want to bring up about that, there's a lot of people out there that you can call up and you say, what's your interest rate? They're going to give you the lowest interest rate that they can possibly quote without knowing anything. They are doing you a disservice because you don't necessarily know that's what you can do. And if you're trying to plan or make strategic plans for your future, take the time, deal with somebody that's going to help you really and truly understand what you're trying to achieve.
No, what you got to say about it?
Oh, I was just gonna ask you to talk about what programs are available.
Great question. Right now, depending in what state you are, you know, it just really depends in what income brackets. So many, I know that the Memphis City DPA just got their funds for the year. They have $700,000 to play around with. It'll be gone in a heartbeat. They were actually cut down. The COVID took a good portion of their budget for the Memphis City down payment assistance. So that money will be gone very soon. You have THDA for the state of Tennessee. If you want to talk about THDA, I'll do that on a private one-on-one conversation. I'm not really going to talk. I don't want to say this. I'm not a super big fan because once I go over the particulars with you, you understand. I don't have the time to talk about that tonight.
Yeah.
You got Mississippi bond money. Just what I'll tell people, know what you're getting into.
Yeah.
And because a lot of times these programs are, they're awesome. And then all of a sudden you get knee deep in them and you're like, this isn't what I thought. You know, I know the institution I work with, we deal with the Federal Home Loan Bank in Dallas, Texas, for low income individuals. And they have an $8,500 grant that's forgiven, I want to say, within 5 years.
Wow.
Great. So it's one of actually my favorite ones. Working a couple of those right now. Call me if you really want to know more about what those parameters are as far as income, because it depends on household size and all these other things. One of my favorite programs is USDA rural housing. And being in the South, there's a lot of pockets that, all of Tipton County, Fayette County, Arlington, little pockets all throughout Shelby County. Millington's a perfect example. Same thing with DeSoto County. All pretty much Marshall County is. DeSoto County, a lot of areas and pockets are also available for USDA rural housing. That's another income-based program, but it's a high income-based program.
Wow.
So, that's one of those things that we, kind of look at. Yeah.
So the main thing is that, for you to understand is that there are programs out there.
Yeah.
There are processes out there to, get you qualified, to
Right.
find out what the necessary steps you need to take. What I tell anyone the first thing to do is to call
Right.
and do like a consultation.
Yep.
When you first go to the doctor, before he, tell you need to do surgery or anything like that, he tells you that you need to do a consultation. Once you get the consultation, then you can come up with a game plan
Right.
on the necessary steps.
Yep.
So our goal is for those individuals out there that want to get a house, for the individuals that might be thinking about refinances, is that we just want to give you the tools to be successful.
Right.
And like I said, is that me and Melody, come on, sit down.
Okay, I'm sorry.
Melody has to step away. But our thing is to really, really impact your life, help you to save money, and to get the ball rolling
Yeah.
on some of the things you want to accomplish, in
Right.
your life.
Right.
And home ownership is a great opportunity to build long-term wealth. I know some ladies and gentlemen that are big into investment properties
Okay.
and investing. That's their retirement,
Wow.
and they're going to do really well. Or some people buy and flip homes.
Wow.
You know.
So can you talk a little more about it? That was something very key that Ryan just stated. He's like, a lot of people take, buy homes and invest for retirement. Because the thing about it, we can't just think about right now.
Yep.
Right.
Long 10 years ago I hit hair. Now I'm bald headed. So you're going to get
Still
older.
look nice, though.
Still look nice. So the thing about it, eventually one day you're going to want to retire. So you have to position yourself now, because you want to look up 65, 70, 73 and don't have a game plan.
Right.
And
So
that comes from making good
Financial
decisions
decisions.
now,
Yep.
and good choices now. Because at the end of the day, you want to look down the road. You don't want to just think about today, right?
Right.
So,
Yeah, and I mean, the way that you pay your house, it affects you. Any time that you can prevent yourself from going 30 days down on any aspect of your credit, whether it be car, student loans, anything. Let me get. There are a lot of people that are in school right now or trying to further their education. Understand your student loans.
Okay.
Understand forbearance.
that's a good one.
Because a lot of people don't understand is when, and catches people off guard quite a bit, is when loans come out of forbearance, a lot of times they don't even realize or notify you. I can't tell you how many people I end up seeing 30, 60, 90 days late before all of a sudden the student loan people aren't calling you until almost 120 days late. And by that time, the damage has already been done on your credit.
Wow.
So pay attention to those student loans, and use them for truly what they are. I do see quite a few people that live off their student loans.
Whoa.
And so just make wise decisions with student loans, because those are one of those things. I've seen people that have been paying student loans 10, 15 years and they're still upside down on their student loans because either they're putting them in
Yeah.
forbearance and that interest keeps on mounting up. And hopefully we'll see some reform, lowering those interest rates and hopefully, helping people with those things.
All right, this young lady says, is there a specific company that is recommended to help improve credit? There are so many out there that are scams, or they
Yeah,
pay you
that's
in a
a
way
good
that
question.
you end up paying out way too much money for their assistance.
Do your homework, do your research. I've been through plenty of credit companies out there that promise you the world. Just read those reviews. I mean, use the internet as your friend. I do have a company out of Colorado. They're not going to make anything crazy happen for you. Their cost is lower. Any company that's going to tell you, oh, I want to do X, Y, Z for you, and says, hey, we need you to pay thousands of dollars, be very wary
Yeah.
of that. There are some, I've had some good luck with some of them, and they've been able to make some things, clean up. But really, truly, credit cleaning up is going to take time. So if you have a ton of issues, just know that it's not a quick fix. It's not literally going to happen overnight, and just be patient with the process. Because the more that you're able to be patient with the process, the more ability that you can either put more money back or truly just find that right home that you're really looking for.
Okay. One individual said, how did you get into doing mortgages? What made you decide to get into that?
People. So I used to sell and rent construction equipment. I've always been sales minded, and a while back, had a gentleman that I went to church with, and he's like, "Man, you know what, Ryan? You know a lot of people. You like to talk, and I still like to talk." And he's like, "Man, I think you'd really be good at this." And that's how it started. And then I have some great people that God put in my life. I mean, I'll give them a shout out right now. You have Lisa Short, Charlie Short, and a gentleman by the name of Eddie Reed, all from Mississippi.
Wow.
And they took me under their wing. They showed me the way and really helped me out in the first couple of years. And anybody that knows me, I'm very persistent and determined. So I never gave up, even in 08. 08 was a tough year. I had to go get a part-time job. to help my family survive at Bass Pro Shops. And, you have those come to Jesus talks in your head, and you're like, okay, stop complaining about everything going on around you. Pull yourself up by the bootstraps and go be the best of you. And I worked my tail off ever since then. And a lot of people say I work too much, but I love doing what I do for a living. So it's like one of those jobs I actually look forward to going to work every day and helping people out.
So whatever you're doing, like Ron, whatever you do every day, let it be something that you enjoy doing. All of us have a purpose. I have a purpose, Ryan has a purpose, and Melody has a purpose. And so Ryan's purpose is mortgages and to help people, put themselves in better positions. So we're grateful for that. We have one more question, Melody.
Okay.
Mrs. Rogers said, what advice would you give a recent college graduate on when is the best time to buy a home?
A recent college graduate.
Yeah.
I would make sure that you are in especially in these times, and people getting furloughed, getting let go. I had a gentleman that had recently got pre-approved. He just found out the other day that he had been completely let go of his job. Had it for a long time, and he was going through the home buying process. I had somebody a couple of months ago. It was furloughed. I would make sure that college graduate is in a stable work environment.
Yeah.
I wouldn't rush out to go buy a home. Know that you're in a stable work environment. Put a little money aside. Maybe put away a couple months worth of rent or mortgage payments.
Yeah.
So that way you have a little bit built up. So let's say hypothetically you did get furloughed or you did lose your job, that you have a little something to fall back on. Just because you just graduated school, I wouldn't rush out there. You got plenty of time to do something.
Yep.
And you know what? It will be so much better for you from a emotional and stress position if you take your time with it and know that you're in a good position, so that, like I said, it goes back to the sleep factor.
Okay.
You're not stressing about how you're going to make that note.
Go ahead, baby. You was about to say something. Go ahead.
I forgot what I was about
Come
to
on.
ask. You may have already talked about this, but what mistakes do you think people need to avoid?
One of the things through the home buying process, don't change your job. And if you do change your job, please let your loan officer know that you changed your job. Make sure that you're communicating all the time. Any information that you're withholding from the mortgage loan officer is our job to find out everything. And it's not because we're bored at work and like we want to pick on people. I promise you this. I want it to go as smooth as you do. I promise you, if not smoother, because I want to provide that great relationship there. And so be completely transparent with your loan officer. Don't change jobs unless you've communicated that with them. Don't go buy a new refrigerator and couches and stuff like
After
that.
you've been approved?
Don't do it until you're actually in the house. I understand that you're excited about the whole process, but these things can come to bite you in the rear end. Because what happens is that we have programs on the back end that people don't know about that will literally tell us if you've had your credit pulled. So if you're having your credit pulled, we may not know that you've gone up on your credit card balance. I will say that. But if you go and apply for new credit, we're going to find out. And I can't tell you how many times I've had people, oh, I just bought a car. What? Thanks for telling me that. I appreciate that. Transparency is key in our business. Don't the skeletons in the closet. Just tell them. It's going to make things a lot easier for everyone.
And it's probably a good idea before you even make the decision to go buy something to communicate that first to see, and then let, Ryan or whoever you're working with to tell you if that's a good idea or not, during that time, because you just don't want to, if you're pending and you got a good score locked in, a good rate locked in, you don't want to do anything to mess that
Right,
up.
exactly.
All right. Cameron Jackson said that he said, I'm disabled and I've been trying to get an apartment or a house. Why is it so difficult for people on disability to get a place?
Great question. My biggest saying, Cameron, is it Cameron?
Yeah, Cameron.
Cameron would probably be, if you're on disability, which is a fixed base income, Social Security disability, could be what your debt's looking like. And I don't know your picture, so I'm not going to assume anything. That's probably the biggest thing, is that even the majority of apartment complexes now are doing a credit check. I actually don't know of any that aren't doing that, really. They want to know that you're going to be able to pay them. And so I don't think it's necessarily that they're trying to push you away because you're disabled. It's just that they're looking at it from a standpoint of, okay, but by the time everything is paid out, does this individual have the money? And that's, now we can gross up disability a little bit because a lot of times it's not taxed, but it could be. I don't know. I don't think anybody's like discriminating against.
Yeah.
I mean, there's too many opportunities for lawsuits these days. It's like everybody's walking on eggshells. I mean, everybody is. So.
We pray something been said tonight that will be a blessing to you.
Oh, wow. It's almost
yeah,
nice.
if you have any more questions, any more questions.
Miss anything?
No,
We could probably keep on talking, but
if you have any,
I can hear Ronnie's stomach growling now.
Sorry.
But we're gonna take 3 more. We have some great real estate agents that we know. Some of my friends.
See, Joel's watching.
Joel Hobson. Hey, how are you doing, Joel? Jennifer Hobson. Angela says she's been getting a lot of things corrected on her credit. And she's been asked to apply for these credit cards through the credit agent to help even more maintain her credit level. Is that something that you would look into, or is it a bad idea?
Yeah, so depending on how much they're trying to tell you to go out, really and truly to really build, like, we go back to the very beginning or midway through, installment-based and revolving-based credit. You don't need to have, if they're telling you to go get more than 2 cards, I would like, no. It really comes down to having 1 or 2 good cards and having that layer, let's say go back to what Ronnie said earlier, $500 max credit limit, keeping it below 150 for the majority of the time, if you can, because your debt utilization on that card then is in a sweet spot. So if they're trying to tell you go do that, I would question them if it's any more than 2. I will say this. Let's say you have bad credit. I mean, I'm talking something below 600 and you can't get a credit card. Take the time, and I know there's some fees that are involved with it. Get a secured line credit card. Spend the time in investing in yourself, which will then allow you to eventually reach your goals. Sometimes you got to put a little bit of money forward on some of those secured line credits, maybe $100, $150. But if it's helping you build your credit so you can reach your goals in home ownership, then put forth that effort into doing so.
Yeah, cool.
I had one more question.
Go ahead, you're good.
What if you have a good credit score and you have credit cards, but you don't use them and you don't have any balance on them, but they just
laying dormant. That's not good.
Does that impact your score at all?
It can't. So here's the thing. Let's say hypothetically you've had those credit cards for 5-10 years and you've always had a great pay history on them, never been late, balances are low. Keep them open and let them cancel you. You don't ever want to go without having any, and it's good to sometimes run a minute balance. I'm dealing with a gentleman right now who has 1 credit card, 0 balance, has had 0 balance on it for a while, trying to get him up about 15, 20 points. I told him to go put $20
of gas
on that card. I'm rescoring him right now. By the time I get done doing that, it's going to boost his credit score up 15 to 20 points because he hasn't had any recent revolving. I tell people most of the time, if you have 7 credit cards open, start dialing them down because then you have too much available credit to be had. I always tell people, I know people are afraid to have credit cards. Just be wary of the credit card company that you're dealing with and making sure they don't have excessive fees. But sometimes, like I said, going back, you got to invest a little bit in yourself in order to proceed forward.
Okay. So, Melanie, we just want to, thank Ron for,
Thank you again.
Thanks for having me.
Yes.
Enjoying this. We probably will eventually do this again because it was very impactful. And I know, some of the questions that you might have had, you might not have been able to ask. But Ryan, give them your contact information in case.
Once again, my name is Ryan Guest. I work for Evolve Bank and Trust. You can reach me at 901-461-7215. That's my cell phone number. And you can also reach me via email at rguest, and that's like guess who, guess what, at GetEvolved, and that's EVOLVED.com. Or you can just Google my name, Ryan Guest. Don't go too far into Googling. No, I'm kidding. I'm kidding. But yeah, just you'll find me. I'm easily accessible. Look me up on Facebook or LinkedIn, or just like I said, pretty easily be found. If you type Ryan Guest Mortgage, I'll pop right up.
You can always reach out to me and Melody. We
yeah.
have his information.
Yeah.
Yeah, Ronnie has me on speed dial.
Yeah, I got him on speed dial. Again, remember, we thank you so much for hanging out with the Johnsons tonight. Our goal is to impact your life spiritually, financially. We want the whole person to just be whole and complete in every area of your life. Melody, will you close us tonight in prayer?
I sure will. Father God, I thank you for this opportunity. I thank you, Father God, for just giving us the opportunity to be educated and learn more about purchasing homes and just to have a better quality of life, oh God. I thank you for Ryan taking out his time, oh God, to come by and talk to our Facebook guests. And I just pray, Father God, that you would bless him and bless his family, oh God. And I just thank you, Father God. And I just ask right now in the name of Jesus that you would touch every person listening, oh God. Whatever they stand in need of, Father, I just pray that you would bless them, oh God. And Father God, I thank you for Ronnie just being able to talk to people and building relationships, oh God, so that we can learn from each other. And it's in Jesus' name I pray. Amen.
Amen. Enjoy your weekend. Do something fun.
Good night.
Good night.